What's going on, guys? Zeb Monopoly here. Today's video is very important because I'm actually going to share with you a strategy I'm using today for swing trading, cryptocurrency, and everything else. If you understand what I'm about to teach you here, you are going to be a good trader. Because really, everything is going to boil down to this. If you understand it, congratulations. If you don't, then you're going to be a statistic. So here's the thing, guys. I've been doing a lot of swing trading the last 7 months or 8 months, and you guys have been following me on Patreon. You guys have witnessed my results. 90%, maybe 95% success rate on all my swings. That's a big number, just so you know. And that's because I was timing the market. And now I released the new articles, or multiple articles, and I told you guys, well, there's going to be a pullback, and surely the cracks have started forming. So how am I coming up with these ideas of when a specific thing is about to happen? And why? Well, the why is simple. If I don't know when it's about to happen, then I'm going to be a statistic. I have to start guessing. And in order to be a profitable trader, you have to guess based on what you see, based on the data that comes up. So let me break it down for you guys. Here is you. Okay, somebody who is clueless in the market. You just enter the market and this is you. I'm going to attempt you right here. Let's see. There you go. So this is you. In order for you to guess, you have to have something called E, which is experience. Experience comes from trading and being in the market constantly. So in your first year, you're actually going to gain experience just by watching what moves the markets. So what moves the market is news. It's future anticipation of future events. So let's say today I'm looking to invest in the markets, and I notice now this is, let's say, Apple. Okay, this is Apple stock, APLE. That's Apple stock. Let's note it, like we've seen today, that Apple stock is dropping. Okay. Now, we notice that there is support level somewhere on the 1 month time frame. I'm saying to myself, is this going to bounce off this monthly support, or is it going to drop below to the 3 month support so I can buy it? Well, what's going to hold this level? What is there to say, yes, this is going to hold this level and it's going to reverse back up so I can buy it here for a swing trade? Well, this has to be something that makes traders and investors confident in the stock or in the economy or in the markets, because Apple just doesn't drop for no reason, or Amazon or any other stock. In most cases, they drop because they follow the overall market condition. But if they do drop on their own, then of course it's a singular event for a specific stock. So in that case, there's 2 support levels. Which support are we going to go for? Do we take this first support and say, you know what, it's going to bounce from this support, I should just buy here instead of waiting? Because most people who wait too long miss the opportunity, because they try to get a stock at a cheap price or make a trade at a cheaper price, and they miss the opportunity, and now they end up chasing it. So the decision comes down to one thing and one thing only. What's going to make traders confident in buying that stock at this specific price? Because that's really what you're doing, is buying at a good price so you can sell at a better price. That's what trading is. It's buying at good prices and selling higher. So what makes us confident, or what makes investors confident that Apple is going to bounce from the 1 month support we spoke about here? I mean, why would we buy at 1 month support? Why not just keep waiting for it to drop to the 3 month support? Well, you have to come up with a hypothesis. This is where guessing comes about. You guess. You say to yourself, 1 month support, I believe Apple has sold off enough and has created enough space from the top to make it attractive for retail traders and investors to buy. And the events that are about to come up are very imminent, i.e., in 3 months' time, you got something like an interest rate cut, which means it has to hold this level, because if it dropped to this level, then it wouldn't make sense, because that means people are not confident in the stock. It's very difficult to explain to you what investors think or how they feel, but it's all about the sentiment of the market. Do we hold 1 month because the sentiment is good, even though there was a little bit of fear? Are we going to hold this 1 month level because we believe the sentiment is going to be good in the future? Or do we sell off completely because we believe the sentiment is going to be bad? So these are the decisions you have to make. I'll give you another example. And this is something for you guys who are currently in open positions. Because really what you're doing when you're trading, guys, is you're timing your entry, and that's where the money's made. It's when you buy. It's not when you sell. It's when you buy, you make the money, because you're buying at a good price. And you notice when you're scalping, sometimes you buy at a specific level, and then it drops, and then it stops you out, and then it reverses. Well, these are the decisions you have to make, which is similar to a swing trader. So here's Bitcoin. Let's say this is Marathon Digital. Okay, now Marathon follows Bitcoin. Marathon did this year, okay, and now it's like doing this. So does it go back to the lows of 2020 or 2022, or does it bounce from the lows of 2023? Well, do we believe Bitcoin is going to continue up? Now, this is the event for Mara. This is the specific event. Do we believe Bitcoin is going to continue? Yes, we do. So that means we have to buy it on the lows of 2023. And it may dip below it, but still, we believe there's an imminent event that's coming that's going to cause this stock to bounce back up. Instead of waiting for the lows of 2021 or so, or 22, and then we end up not getting it, and then we miss the opportunity. But what does that mean if we end up buying and then it dips below? Well, it means we're going to be at an unrealized loss. And this is where your balls come into play. You have to really believe in the outcome. You have to believe in your hypothesis, in your guess that you said there was an event that's coming up that's going to cause the market to be hopeful one more time. Similarly, if we're waiting for a dip, we're coming up with something that says there's going to be an event that's going to come up that's going to cause the market to be fearful, which will cause a drop, which means it will create an opportunity. That's how I come up with my hypothesis. So it really all depends on this concept. It has nothing to do with charts and whatnot. In most cases, this comes first, and then when you say, yeah, it's time, you look at the chart and you see it. You see, yes, it's time. The chart will start telling you, you're right, your hypothesis is correct. Okay, guys, hopefully you understand this. I know it's going to be very difficult for beginners to understand this, but I think most of you watching me, you're a little bit experienced in the markets. I'm going to make a lot of these whiteboard lessons, so don't forget to smash that like button so the algorithm knows you want these videos. I'll see you guys next time. Bye-bye.